Hello everybody and welcome once again to this virtual investor event hosted by NZX. My name is James Sharp. I'm Senior Relationship Manager on the Capital Markets Origination team at the Exchange. First and foremost, I hope everyone is well, conscious that many of us are still in a kind of restricted lockdown situation. Collectively, we are all, of course, hoping for a good summer getaway and a bit of light at the end of the tunnel soon, hopefully. As ever, we'll hear from three presentations, each lasting about 15 minutes with 5 minutes of Q&A. Please send through your questions. We'll endeavour to get to as many as we can during the session. Anything we don't get to today, we'll get answers over to you in the coming days. To ask a question, please do so via the question box in the webinar panel. And that's it, let's get started. So first of all, a very warm welcome to Mark Malpass and Richard Smythe, respectively the CEO and CFO of Steel & Tube Holdings, one of New Zealand's leading providers of steel solutions with over 68 years of trading history. Mark, Richard, over to you. Back in a few minutes with some questions. Thank you.
Okay, thanks, James. Well, Richard and I are both based in Auckland, so joining from our respective home offices. Today, what I'll talk about is give you a brief on Steel & Tube, what we do, talk about our recent trading performance, and also give an overview of our growth strategy. I'll move through the prepared charts fairly quickly so that we've got plenty of time for Q&A at the end here. So Steel & Tube is one of New Zealand's leading providers of steel solutions. Our biggest strength is our breadth of product, our depth of our range of products that we supply. Our competitive advantage is driven off that breadth and depth of product range. Supply is a key issue in the market at the moment, and so we've built on our relationships with our long-held steel supply mills and also shipping companies to ensure that we have access to a large range of product to be available for our customers at any point in time. So as we move forward, we've made sure that we've invested in high demand products to ensure that we have those products available for our customers. Our purpose is to make life easier for customers needing steel solutions, and we do that through unparalleled service experience and the highest quality products. Our vision is to be the supplier of choice, and that's enabled through that one-stop shop for most essential steel products that customers need, and doing everything we can to make life easier for customers wanting to buy steel products. We're always looking for ways to work smarter, using technology to enable better business, and also building on one great team that we have right across the Steel & Tube business. I'm going to just step through a few photographs of the type of projects and products that we supply. Many people don't realise that Steel & Tube is involved in almost every part of the New Zealand built economy. We supply about 46,000 stock units, and so we're involved in projects. And I'll just flick through some of the key projects we're involved in. Everything from, you can see the City Rail Link project here, commercial bay building, a lot of stainless steel facades, roofing, flooring, and everything in between. We also provide rural economy with gates and wire, milk and dairy industries, providing stainless steel. And you can see some services industries. We were involved in high pressure valving systems through the petroleum sector. One of the key advantages of the Steel & Tube business is that we have quite good diversity across many sectors. We're not just a construction supply company, for example. So you can see, about 47% of our product mix in the bottom left of the pie chart there is the commercial and residential construction markets. You then see the infrastructure products is about 14% of our business. Manufacturing, food manufacturing and non-food manufacturing make up about 31% at the moment, although that's sometimes as high as 40%, and then rural and merchants is another 8%. Our business is grouped into two key divisions. So the distribution business makes up about 60% of our revenues, and this is products sourced from preferred mills and throughout the Asia Pacific region and distributed through our national network. Conversely, our infrastructure products division, where products are actually processed before sale. So typically they're on a contract or a tender project type basis, And we also include on-site installation services in many of those businesses. So just some of the products and distribution, carbon steels, piping systems, chain and rigging, fastening products, rural products, and stainless steel. And then on the infrastructure side of the business, we have roofing, coil processing, purlins, and comp floor businesses. And then also reinforcing and composite deck floor businesses. We've set ourselves 4 clear goals and have plans in place to achieve each of these. So firstly, to be the best in the business. Secondly, the preferred choice for our customers. Thirdly, a rewarding place to work. And then last, of course, an attractive investment for our shareholders. We take our responsibilities very seriously to add value and leave the world in a better place. So both for our people, our communities, our customers, and our shareholders. I'll talk more in the next couple of charts about sustainability. We work closely across the sector participants to promote steel as an important, essential, sustainable building material and encourage a cradle-to-cradle methodology when product assessments are being made. Steel is ultimately, the infinitely recyclable product. It has limited degradation. It's very easily reused and repurposed. Steel has very minimal construction waste, compared to other building products. So typically, our landfills are made up of, 40 to 50% of concrete and timber products, whereas steel is recycled. And a significant proportion of steel that's, purchased in New Zealand is obviously made using renewable energy and also iron sands. Steel is very durable, which means that there's less need for replacement as structures change. Last but not least, steel's seismic qualities mean that it's very resilient in earthquake situations. It doesn't buckle or warp. While reducing our carbon footprint is obviously extremely important in terms of our operations, it's not the only ESG or environment, social and governance item that we're focused on. We've made really good progress on all of the key metrics in the ESG suite, and these include health and safety, and quality, operational excellence, customer satisfaction, and also employee engagement. We thought it was worth just recapping on the strategic pathway that we've been on over the last 4 years. In late 2017, we embarked on an extensive company-wide reset just to drive long-term earnings and shareholder value. And Project Strive was really completed over the last 3 years. This is a strong strategic program that's largely, reset a lot of the operating foundation of our business. And I'll talk through just some of the initiatives that we've undertaken a little bit later on. Our efforts have delivered a strong improvement in year-on-year earnings, and you can see this was a recently published financial year 2021 earnings. And you can see that we've improved volumes, revenues, and margins. Our revenues were up 15%. We've locked in about 13.5% of cost savings. And so that combination has meant that we've had really strong earnings growth. We also moved forward with a very strong balance sheet. So we closed the financial year at June 30 with cash on hand of $25 million and no borrowings. So that financial year 2021 was really the first year that we've seen the benefits and the rewards come through from the hard work on our strategic turnaround. We've locked in these benefits and we're now building on that platform going forward. And I'll talk through some of the initiatives that we've put in place. So as a fundamental platform for our business, quality and safety are a real license to operate for us. You can see that our total recordable injury frequency rate for our employees is down at 1.86, and that's continued to improve, which is an industry-leading type number. We invest heavily in our safety program and training and an ongoing hardware in terms of guarding and machine and truck guarding. We've also got a very strong quality program where we have ISO 9001 embedded right across our business that was recently recertified. We use Lloyd's Register, the international company, to certify and check for compliance all the steel mills that we buy from. We also have in place a number of independent testing programs that we deploy to ensure that our products are of the highest quality. We've focused on our network optimization over the last 3 years, and you can see there's a significant change in our sort of network footprint. We operate a hub and spoke model where we have large distribution centres through Auckland and Christchurch that deliver through the rest of the network. And that hub and spoke model has evolved over the last 3 or 4 years and ensures that we're providing full service and range of products to our customers no matter where they are in the country. So we've been able to keep that national footprint, but also significantly improve the efficiency of that network. And so you can see that we're down to about 26 operating sites, and that's about our long-term footprint. So a lot of work has been completed that's ensured that we've provided that customer service throughout the country, but also at a far lower cost structure. On the topic of costs, we've been able to reduce our costs significantly year on year by about 13.5%. So we're down about $12.5 million year on year in real cost savings, and those costs have been, those benefits have been locked in. On the right-hand side, you can see some of the costs that sit up in margin. So direct labour, freight costs sit up in margin, and you can see that those have tracked well, in fact have reduced as a percentage of sales over the last 12 months. Supply chain management has been a key focus for us, and over the last year or two, in fact the last year, we've had in place a general manager that's been running our supply and operation planning process, as well as those big DCs, distribution centres that I mentioned, to really get that hub and spoke model working well. Our key focus in this area is to increase the velocity of fast-moving inventory through our system, particularly in an environment of global supply chain challenges and congestion. We've been able to build on our fast-moving inventory and also reduce our aged inventory in our system. So the whole system has become far more efficient. And the role of technology has been a key play here, where we've improved traceability. So we put barcode scanning across our products, which has meant improved quality and traceability of our product footprint. But we've also increased significant use of data analytics, particularly in the area of pricing, governance and controls. We've also put a lot of resource and effort into our sales disciplines and customer excellence program. You can see on the left our Net Promoter Score, which is a commonly used indicator to measure customer satisfaction. And for the financial year 2021, that averaged at about 34. In fact, for the first 4 months year to date, we're running at about 45. So we've continued to improve on our customer satisfaction scores. We've set up a centralised customer excellence centre, which is really focused on better service, access to specialist knowledge for our customers, and a lower cost to serve. We've also deployed, digital in the customer space as well, with a recent investment in a CRM system, so customer relationship management, that helps us with our focus on customer segmentation and category management. That's also providing far better service for our customers. Our digital investment has been identified as a really key opportunity for the business. Typically, steel companies are quite analogue in terms of the way they operate, and we saw a really big opportunity to bring digital to the market, and we're first to lead that in the construction and materials manufacturing space and supply space. So we've implemented web stores, an e-commerce platform, data analytics, customer management system. We've also implemented online training systems and new digital tools to make life easier. Those examples, include our chatbot Stanley. So Stanley is, answering questions for customers. Customers can access him to gain test cert information. So that's typically been a problem in our industry, and we've now been able to automate that process so customers can access those through Stanley. They can ask him questions, get pricing information, and also feedback on deliveries and where deliveries are at. We've also improved our online ordering program, where customers are able to access web stores online, and we're continually adding features to that, included in that as favourites for customers, so that they don't have to spend long on the web stores when they place their orders. Last but not least is our investment in people. Recruiting, retaining and developing our people is obviously a key priority for us. Again, digital is a big part of our training programs for our people. We have over 2,000 modules that have been set up to enable our employees to access. In fact, during lockdown, it was great to see a lot of our frontline workforce that couldn't work during lockdown were able to access those modules and increase their product knowledge and knowledge ranging from everything through to wellbeing. We've also seen a consistently high engagement score across the business, which has improved to about 74% or 7.4 out of 10. And you can see our employee net promoter score has increased progressively. We've also run cadetships, scholarships, and mentoring schemes, as well as work placement programs where we've worked with our local communities to be able to place school leavers in jobs. Auckland remains at alert level 3, and this is the 4th time in less than 2 years that our business has either been closed or has been restricted due to the pandemic. At alert level 4, we were unable to operate except for supporting essential services. So we're providing services to about 700 essential services companies through that period. At alert level 3, we're obviously able to move into operations under strict COVID requirements. We also took a leadership position in providing vaccine incentives, which has been picked up well by our employees. So just moving to the kind of progress or trading performance for the first 4 months of this financial year, so between July through to the end of October, you can see the red line showing our trading performance year to date versus the blue line in the prior period. You can see up until the lockdowns on the 18th of August, our trading was very strong. In the base case, we'd been up about 29% year on year. We then went into the lockdown period until about the 22nd of September, where trading was obviously impacted as we were only providing services, supplying the essential services companies. Since that period, you can see trading has been very strong. In fact, our year to date over that full 4 months is running at an increase of about 14% year on year. So that includes the sort of damage that we had during that lockdown period. So a 14% increase, which is building on the positive trading that we've been seeing to date. Our sights are very clearly on continuing to grow our business, and particularly growing our gross margin dollars as we move forward. There's 3 key areas of focus for the business: continuing to build on our strong business foundation that we now have in place, with a real focus on that digital investment that I mentioned earlier. Gross margin dollar improvement is a core focus for the business, as well as continuing to build on our operating efficiencies and leveraging the breadth and range of products that we have across our business, so cross-selling through our range of products. We're investing in new products and opportunities that will extend our range of products across our business, and so we're excited about some of the investments that we've made that will start to come into play in the second half of the year. While our primary focus is on organic growth, we're also continuing to consider opportunities in adjacent sectors. Executed well, we will continue to deliver to drive our bottom line growth and value. Market conditions remain very positive, at least for the medium term. As the economic cycle it will be stronger for longer. Residential is expected to flatten, but we are expecting that the interest rate rises and supply demand imbalance will slowly reduce as the borders continue to be closed. Commercial, we're seeing a very positive uplift in consents and a significant increase in tenders that are coming to the market that we're pricing at the moment. Infrastructure is continuing to build due to the significant underinvestment, and we've all seen the programs that the government are putting in place to invest further in infrastructure. And we're also seeing the manufacturing sector to expand, which is important to us, as that's typically ranging between 30 to 40% of our sales. We see a very positive outlook. We have a number of opportunities identified. We have a strong pipeline of secured work in place. The current market conditions play well into our offer, and we're very well positioned to take advantage of that. The current market, conditions are very strong, and our focus remains on that gross margin management and gross margin dollar improvement across the business. and customer delivery and growing our sales across all of our attractive customer segments. We're expecting to see continued earnings momentum and dividend flow for shareholders, and we're investigating potential capital management activities as we go forward into the next financial year. We're very confident of our strategy and our people and our positioning, and we're looking forward to continuing to build on the strong platform that we've put in place. So thank you for listening, and I'd now like to pass over for questions, James.
Great stuff. Thanks very much, Mark. Great presentation. Really interesting seeing how that trading performance has come up so impressively after that sort of level 3. We do have quite a few questions here. We'll try and get to as many of these as we can. First question here from the audience is: global steel prices have been on the rise. How has this impacted steel and tube?
Yeah, sure. Look, I mean, globally and regionally, what we're seeing is demand is exceeding supply. So most of the mills, in fact, all of the mills at the moment, have customers on allocation. So we buy from, up to 30 steel mills across the region, and they're all very tight on supply. So that obviously has an impact on prices. The New Zealand market, like most markets, operates on a replacement cost type scenario. So, all of the players in the industry really are operating on fairly thin margins, so have no choice but to pass those cost pressures, whether it be product prices or shipping pressures or wage inflation, through to the market. And, given the long lead times of, 4 to 5 months at the moment, I think most incumbents in the market would be seeing similar cost pressures that they're sitting on. And so unfortunately what that means is we'll probably see fairly strong price increases continuing. In fact, I think I see most participants seem to have increased prices through the December-January period. So we're anticipating that those prices, given the lead times, will continue into the next calendar year.
Okay, great. Thanks, Mark. Another question here is: I think you mentioned cyclicality in your presentation. Would you say that steel and tube is a cyclical business, and if so, what part of the cycle is the company at?
Yeah, it's a good question. Look, I mean, that pie chart that showed our revenue exposures, you could see that about 50% is exposed to construction, another 14-15% to infrastructure, and then about 30 or 40 is actually exposed to manufacturing. So the great thing about steel and tube is our diversity of revenue exposures, and so that means that we're not sort of pegged to any one particular sector. For example, residential floats from 15 to 20% of our mix. If that flattens off or comes off, we also tend to see the manufacturing sector sort of strengthen. So we're fortunate in that we've got quite nice revenue exposures.
Fantastic. Okay, great stuff. We've probably got time for one more question here about market share. What is your market share, and how has this trended over the last 5 years?
Yeah, I guess one of the downsides of being involved in so many sectors is that you don't really have specific barometers to give you accurate market share reporting. Of course, we do monitor. We have import stats and other data that we use to monitor our market share, and we think we're growing. As I mentioned, we've invested fairly heavily in fast-moving inventory, and we know through various sources that we're quite well positioned in that space. So yeah, we've seen some quite good growth.
Great to hear. I think we'll have to leave it there, but thanks very much, Mark. Thanks, Richard, for your presentation this morning. We do have a couple more questions we'll send across and try and get some answers back for those. So thanks very much once again, and enjoy the rest of your morning.
Thanks for hosting us, James.
Thanks, guys. Fantastic. So we'll move on now to our second presentation, and we're going to hear from Summerset Group Holdings, and we should see very shortly Will Wright appear. So Will is the CFO of Summerset Group Holdings, with key responsibilities across finance and corporate services. Summerset are now proudly New Zealand's second largest retirement village operator, with more than 6,600 residents enjoying resort-style facilities in secure, vibrant and welcoming communities. A very good morning to you, Will. Over to you. I'll be back in a few minutes with some Q&A.
Thanks, James. Can you see my presentation now?
Yeah, that very clearly. Great. Yeah, can see that.
Great, thanks. Good morning, everyone, and thanks to the NZX for inviting me to talk to you today. I'm currently in, apologies, I've just lost my screen, but I'm currently in lockdown in Auckland, and so I'm joining you from my windowless basement where I spent most of the last 10 weeks. Apologies in advance, you may hear my 3 boys fighting upstairs. They seem to time it perfectly to coincide with these presentations. I've been with Summerset since early July, after 7 years at Fletcher Building, where I was most recently the CFO for the Building Products division. At Summerset, I've been pleased to find a business with a strong culture, solid systems and processes that have scaled as the business has grown rapidly. We also have a great platform for ongoing growth with a well-diversified land bank and a delivery arm capable of building at scale. I'd like to talk to you about 5 key areas today. Firstly, our purpose as an organisation and the compelling opportunity for us as a business in response to the major demographic trends in New Zealand and Australia. Secondly, a quick overview of the business and the business model for those of you that are less familiar with Summerset. Thirdly, I'll touch on our strong track record. The business has consistently delivered since listing and impressively has had an underlying profit 10-year CAGR of 34%. Fourthly, we have a very strong growth runway. We have the largest land bank in the New Zealand sector, providing a clear pathway to doubling the business here. Meanwhile, in Australia, we have secured 5 sites with earthworks underway shortly at Cranbourne North. And lastly, I'd like to touch on our ESG progress. Our purpose as an organisation is bringing the best of life, whether that is to our residents and our villages or providing a high standard of care and amenity to our employees who are the heart of the organisation. We are ultimately a people-focused business with our residents at the core of our decisions. A typical resident joins one of our villages in their 80s, seeking much more than the physical dwellings we provide. They choose Summerset for the community, security, the support on offer, and ultimately the continuum of care that ensures they have choice and respect in all stages of their journey. The ageing population provides a strong growth driver in both New Zealand and Australia, with the over 75-year-old population now entering a multi-decade phase of unprecedented growth. The chart on the left shows that New Zealand's over 75-year-old population is expected to increase by over 200% over the next 50 years. We're in a particularly high growth phase right now, with the current target population expected to double in only 17 years by about 2038. It's important to recognise that these projections have a high degree of certainty as compared to other projections you'll see for other industries, which depend on economic forecasts. Our demand projections are based on historic birth rates back in the 40s, 50s and 60s, recent census data and changes to factors such as life expectancy. There is a certain inevitability to this. In terms of penetration, there is also further upside. Penetration rates are increasing across New Zealand by about 1% per annum as the wider population come to understand more about what villages offer and the value proposition of retirement living. Over in Victoria, as you can see in the chart on the right, the story is very similar, but even more compelling. Over the next 50 years, this population group is expected to increase from around 410,000 today to around 1.4 million. Meanwhile, the penetration rates in Victoria are lower, being less than 10% compared to 14% on average across New Zealand. This slide shows the 3 key areas in which the business operates. Firstly, we provide aged care services to our residents across multiple facility types. Our villages are designed so that as a resident's needs change, we have different levels of support and care within the village. Secondly, we have a significant asset management business, ensuring that our operational villages and associated amenities are operated and maintained to the highest standard. And finally, retirement village development, which is a key driver of growth for Summerset. We have 13 sites across New Zealand under development at the moment, and we'll have up to 17 under development by the end of next year. Summerset is now home to over 6,600 residents and 1,900 staff. There are about 4,700 retirement units and about 1,000 care units. We have 45 villages or sites, 20 of these completed, 13 under construction, 13 not yet started, including our 5 Australian sites. Our typical broadacre village have about 300 units, with about 250 of these being for independent living. Continuum of care is extremely important. This continuum provides peace of mind for our residents that they will be cared for when their health needs change in the future. Our villages are designed so that as your needs change, we have different levels of support and care within the village. You can see this in the progressive chart on the right. This provides an opportunity for remaining close to family and friends and staying engaged in community life as their needs change. We are a leading provider of care with a focus on quality, not scale. This is demonstrated in our high levels of customer satisfaction, which average 96%. Summerset is a New Zealand leader in next generation memory care. Our design and operations teams have used research from international dementia design specialists to create apartment-style living for residents with dementia. Our modern design offers clear wayfinding, dementia-friendly signage, large communal areas, and a secure outdoor courtyard for freedom of movement and independence. This is a growing point of difference for us. Our continuum of care model is much less common in Australia and will certainly be a competitive advantage as we expand into this market. We have a track record of solid growth. Summerset has consistently delivered on its growth ambition for 24 years. Again, don't underestimate the intellectual property that allows us to build at scale, a complete platform of people, systems, processes, and designs built up over decades. You'll typically see us only develop greenfield sites. This enables us to control the look and feel of the community and ensure that the buildings are of the highest standard. Once a village is complete, we typically recycle all of our capital and use this to invest in the next village. This enables us to continue to grow the business without the need for additional equity. Summerset is the second largest and fastest growing operator in the attractive retirement village segment with 11% share. People often think large retirement village operators make up most of the industry, but in fact, all listed operators only make up 39% of the retirement village share and 23% of the care segment. Other operators tend to be owner-operated or not-for-profit with older facilities and tend to have less services and amenity, as well as not having a full continuum of care. Summerset listed on the NZX in 2011 and on the ASX in 2013. Over that time, the business has delivered impressive financial results. Underlying profit has increased from 8 million to 98 million. Total assets have grown from 600 million to 4.4 billion as of June this year. And IFRS profit has gone from 4 million to 231 million in FY20. Total equity has increased from 230 million to 1.4 billion, and our net tangible assets per share have grown to over $7.07 as of June this year. We're all familiar with the strong housing market story, which we do benefit from, but I would just reinforce that we have only lifted prices 8% over the 12 months to June this year, versus the market, which moved 29% over this period. So we are well placed in the event of any economic downturn or property market softening. The embedded value within the portfolio now exceeds 1.1 billion. Embedded value per unit is now 240,000. So even if prices were to soften slightly, the economics of the business remain strong. In the first 6 months of this year, we completed 347 total units, including 63 care units, a 6-month record for Summerset. When we build villages, we use our in-house development and construction teams. They do everything, from purchasing the land, designing the villages, and consenting and constructing our villas and main buildings. I've been impressed with the capability of these teams, and they are certainly delivering excellent value for the business. We have invested heavily in developing a well-planned and diversified land bank over the past 3 to 4 years. This sets us up well to double in size over the next decade. We now have the largest land bank of any RV operator in New Zealand and continue to actively look to add further sites to our land bank. We've also focused on building a geographically diverse development pipeline. We have 23 sites in various stages of development across multiple regions. We have around 25% of future developments situated in the Auckland area, compared to around 50% of other operators. This is a key point of differentiation for us. We also have around 28% of our land bank located in the South Island, compared to just 13% for our competitors. We like the flexibility investing in the regions provide. We get greater access to suitable sites. Consenting is more straightforward in provincial locations. It's less capital intensive, with broadacre villages having significantly lower peak capital and greater ability to develop and sell down in stages. And it diversifies our property market risk. We're currently building across 13 sites, and I thought I'd show you a few aerial shots of our progress at Whangarei, Hobsonville, Rotorua, and Papamoa. It's important to build across several sites rather than being focused on only a few. Delays outside your control are inevitable at individual sites, and diversity of development has never been as important as in the last couple of years with regional lockdowns. The Australian opportunity. Summerset will offer a full continuum of care in Australia. This sets us apart from many of the competitors there, where it is commonplace for independent living and care to operate separately across different locations. We will be building our first village, Cranbourne North, in carefully planned stages. Planning for our specialist care centre and care services at Cranbourne North is already well underway. The care centre will offer a unique household model with no more than 18 residents in each household. Each resident will have a private room and access to a shared lounge and dining areas. This will provide them with the comfort, intimacy, and closeness of a family unit and will allow our care staff to focus on each individual resident. Despite the extensive lockdowns in Victoria, we continue to make good progress in Australia. We have received our planning permit for our first site in Cranbourne North, and earthworks will be underway shortly. Momentum in Australia is building quickly. We started this year with 2 sites. We announced the purchase of a 3rd site in March. And then at half year, we announced our 4th site. And we've just announced in September our 5th site at Oakley South, about 16 kilometres from Melbourne CBD. This is a mature suburban area which is well serviced by a range of social, recreational and retail amenities. The land is located in Melbourne's renowned Sandbelt, where a number of Australia's best golf courses are found, and shares a boundary with the Metropolitan Golf Club, overlooking the 16th and 17th holes. As was outlined earlier in the year, we won't stop there. Our intention is to build the Australian land bank. We feel we are delivering on this promise with these 3 purchases having us well on the way to achieving this. We continue to take steps to improve our sustainability and reduce our impact on the environment. Summerset is still New Zealand's first and only carbon zero certified retirement village operator. We have seen our carbon emissions reduce by around 31% from our base year in 2017. We are halfway towards our 2032 science-based target of a 62% reduction in emissions intensity, and we are always exploring new ways to reduce our environmental impacts. Recent examples include the fact we've stopped any future implementations of gas boilers in our villages. All future villages will have centralised electric vehicle charging stations for residents and for visitors. We have committed to waste diversion targets for construction waste from landfills, and are undertaking a review of our main building design to reduce embedded emissions through the use of different materials. This year, we are also very proud to become New Zealand's first retirement village operator to link sustainability into our funding arrangements. This commits us to a set of sustainability targets over the tenure of our refinance banking facilities. To wrap up, the key investment highlights for Summerset. We have demographic trends that are supportive over the long-term growth. We have a high standard of full continuum of care. We're able to double the size of the business over the next decade of the existing land bank. Victoria provides another growth vector for the company with the potential to replicate the success of the New Zealand business. And we are a responsible operator with ESG considerations at the forefront. I might pause there and hand back to James, see if we've got any questions.
Thanks, Will. Great stuff. I'm very familiar with the likelihood of interruptions at this thing from young kids. It's amazing how they know, but when people are presenting, but we didn't see that. But great, thanks for that. We do have some questions here. So first question is, there are a lot of retirement villages being built. Are we looking at an oversupply problem developing in New Zealand?
Yeah, great question. Thanks, James. So look, you would have seen in my presentation the overwhelming sort of demographic tailwinds that we have. You know, we've got an aging population that's forecast to double in a very short period of time. And so we need to continue to build to be able to cater for that population. You know, even if we don't increase penetration in our population, and we still need to build between 2,000 and 3,000 units per annum over the next little while just to cater for that aging demographic. It's also not the same all around New Zealand, and hence why we've taken a regional strategy. Penetration rates are lower in other parts of the country, or in retirement destinations, people tend to move there to retire, and therefore there's higher penetration rates.
Interesting. Okay, great. We had a question here about your land bank in Australia, which I think you covered off already in the presentation. There is another question in terms of the Australian market. So is the Australian market any different to the New Zealand market, i.e. will Summerset strategy / business model work just as well over there?
Yeah, it's interesting. There's a few differences, and you know, we think it might operate better. In Australia, where they've come from is they traditionally had builders building retirement villages, and builders didn't want to be involved in the provision of care. And then they had people from a care background building just care facilities that didn't want to be builders of villages. And so the unique thing that we have in New Zealand is we have people willing to do both. And we're looking to export that to the Tasman. And so across the Tasman, and in Australia, in Victoria, only about 1/3 of facilities have a continuum of care, and sometimes it's not the full continuum of care. So we think that offers a real differentiator for us in the Australian market. Also, the economics in Australia are slightly different as well, where people tend to take out ORA-type licenses for the care beds as well. So the economic model is better over there, where you get a lot more of your funding out up front.
Okay, great stuff. I think we'll just, in the interest of time, just leave it there. Will, thanks very much. We didn't have any other questions. Thanks very much for your presentation this morning. Enjoy the rest of your day. And
thanks, James. Thanks for having me along.
Thanks, Will. Thanks very much. Fantastic. Okay, let's move to our final presentation. Welcoming to the event, we have AJ Smith, CEO of TradeWindow. CEO of TradeWindow. TradeWindow is a software company that has developed a digital platform to streamline global trade, providing solutions to all organizations across the supply chain ecosystem. Keen observers amongst you will know that TradeWindow is not currently listed on NZX, but have stated their intention to do so in the near future. So really looking forward to hearing more from AJ. Over to you. Back again in a few minutes with some questions. Thank you.
Thank you, and good morning to everyone. Really excited to be here today and tell you more about TradeWindow. So TradeWindow is a young company. We're only just over 3 years old, but a young company with big ambitions, with a reputation of delivery. We're a software company, and we provide digital solutions to exporters, importers, freight forwarders, and custom brokers. And that really helps them to increase their productivity, increase their connectivity, and enhance their visibility. And that is important in today's age, when the digital world has pretty much taken over. And we work very closely with our customers and understanding really what is their pain points and how to solve these. So since foundation, we've been working with these leading companies, and we've been covering areas of compliance, operational management, logistics, obviously trade data management, and then end-to-end supply chain traceability. Very important to understand, TradeWindow built digital trade infrastructure, and we're not just a point solution or a software solution. And it's fast becoming the network of networks, and that's really to our sector neutrality. We provide a cohesive digital trade platform that enables our customers to share their information securely and collaborate with the global supply chain partners. And those partners are made up of customers, ports, terminals, shipping lines, banks, insurance companies, and then government, to name a few. Our Q platform is underpinned by blockchain. Blockchain is very useful in providing a immutable order trail and help validate and verify each transaction or contract. Now, from day one, we had a global mindset. We established a presence in New Zealand, where our head office is. We have offices in Australia and Asia, and currently employing 86 highly skilled subject matter experts with deep knowledge in our area, specifically software development, cybersecurity, supply chain and trade, sales and marketing, and then all the other related services, including customer support and HR and finance. We knew that the company had the potential to become New Zealand's next success story, and we concentrated to getting really high quality subject matters experts in our executive with global experience, and I'm happy to say that that strategy is now paying dividends. If we look at our technology side, well, the platform is really built on a scalable multi-tenant infrastructure network, and that really helps us to scale up our customers, and a lot of these are enterprise level customers. We use AWS and Amazon Azure to provide our cloud computing infrastructure, and I'm very happy to say that we have ISO 27001, 9001, as well as PAS, and 17020 quality management systems approved and working across our business. Also, the solution facilitate mission critical data, and across the Australasian exporters, that is really high level and highly confidential trade data that needs to be secured with really the best secure systems. We also incorporated and integrated our solutions into blockchain, and this is important to increase the supply chain transparency and increase trust among trading partners, and also data integrity, and it really helps with things like end-to-end tracking of products, helps to increase the confidence in trade partners, also helps with end market users, helping with eliminating even counterfeit products and market callbacks. True to our vision, it's important for us to enhance productivity, help with the connectivity, and then obviously increase the visibility. And that is across the trade compliance products I was talking about, logistics, the finance, freight, forwarding, and then the custom broking side. Now, if we go to the market overview, TradeWindow operates in that trade tech market, which is a new space, but to articulate the size of that, so the white space for trade tech is $2.8 trillion US, and that's really calculated on each country. If you multiply the annual shipments, both A and C, with the volumes by the documentary compliance cost and the border compliance cost, and these figures are sourced by the World Bank. Our initial and immediate market is Australasia, and we estimate that this market presents a $12.1 billion of white space. And we've already established a beachhead in Asia with a market estimate of $297 billion of annual white space. We're also in early exploration in markets like South America, with Chile potentially being the beachhead entry into that market. If I go to why now, why is it a good opportunity right now? And I would point out COVID. COVID is and other macroeconomic events, including the US-China trade war, things like Brexit, and all of that has really created this perfect storm for us in global supply chains, and consequently businesses around the world has been disrupted with delayed shipments. We all know about it, and increased cost, stalled production, and furthermore also the cyber criminals have spotted awesome opportunity here to really attack these mission critical data, and a lot of businesses has left the cyber integrity side of their businesses and have not really invested in their digital security side of their business, and that really helps with adoption of highly secure digital trade solutions like solutions like TradeWindow can offer, really to bring that supply chain resilience, to protect their data, to reduce their cost, and then meet their customer experience with with a less frictional experience. And then what's furthermore is governments has also now enacted new free trade agreements. We can see that in the likes of New Zealand's participation in DEPA, the Digital Economic Partnerships Agreement, and with Korea and China now also joining. These are all important elements to making digital trade a reality. Now, if I go to our customers, we have amassed a high quality customer base, and including in Australasia, we've got the leading exporters and freight brands as customers. We've currently got 382 subscription customers, with no single one customer contributing more than 2% of our revenue. The majority of our customers are mid-sized to large enterprises, and they span across meat, seafood, horticulture, forestry, manufacturing, and then obviously freight and logistics as well. With more regard to freight and logistic customers, these seem to me the smaller side of the freight and logistic market, and because we've got a more affordable price, but our closest rival in that space is WiseTech Global. In terms of our growth strategy, we underpin our growth with 3 initiatives. The first one is to increase the existing customers by cross-selling and upselling further solutions. The second one is to increase our market penetration and to win to new customers. And we've already got good penetration in the local market, and majority of New Zealand's exporters are already using at least one of TradeWindow's products. In Australia, we are building momentum and focusing on winning new customers. In Asia, we are establishing an agency network. And the third one is to expand our product offering through customer-centric innovation, and that TradeWindow is doing with product development processes, which is driven by collecting and collaborating with customers and finding solutions and coming up with ways to solve their problems, and really enhancing that experience among the whole ecosystem, and that's customers, ecosystem partners, and then with employees. And where it will make economic sense, we will then look at supporting these initiatives with targeted acquisitions, specifically where we can acquire customers at a lower cost than it would be using organic sales methods, and where it's complementary, obviously, to our capabilities. Now, customers are typically starting their digital transformation by digitizing their back-end operations, and that really is on their productivity side. And we've got solutions in that space called Product and ExpressDoc. Product being more the enterprise level productivity solution, and ExpressDoc more the SME, small and micro type businesses that really just want to take the first step in digitizing their back-end offices. On the freight side, freight forwarder customs broker side, we've got again the same type of split with freight forwarding and custom brokers in more mid enterprise in a product called TradeWindow Freight, and then the smaller end of town we've got Express Freight with a recent acquisition that we've done on that product. With our connectivity layer, we've got a product called Cube, and Cube is a cloud-based platform, and Cube really connects all of the 4 data silos. And the 4 data silos in global trade is made up of, commercial, which is the importers, exporters, the logistics is, carriers, ports, and then finance is the banks that play into that, and then government, it's custom brokers and all the different agencies, government agencies that help facilitate trade. Now, data is really captured in that productivity layer. In that productivity and connectivity layer, we then repurpose and aggregate and enrich that data. And then it helps us to increase that visibility that we're talking about, increasing that data throughout the whole entire supply chain. And that really helps us with managing that risk and engaging more clients in that ecosystem. We look at what is our commercial model. Now, revenues from each client and each customer may vary, and that may vary depending on the customer size and what type of customer. Now, revenues on Product and Cube, as I mentioned, are really made up of monthly subscription fees and transaction fees. And then on the product side, more specifically, it's related to shipping documents or contracts, as we call it. On the freight side, it's a combination of subscription and also charge per module, and then also a number of users that use the product. On the ExpressDoc and Express Freight products, it's monthly, mixed between monthly subscription and transaction fee, and that really is that smooth onboarding, easy self-onboarding products that we slot into that one sector of the market. In terms of revenues, other revenues, we include also installation and service fees, including customization, as we also service that top end of town enterprise clients. It's important that that capability is there to service those level of clients. Looking at our competition, looking at it from connectivity, visibility, and productivity layers. If you look at there, we have competition. We've got competition in the visibility layer, which is that type product that brings the visibility as the last part of the I would say the digital supply chain. In the connectivity layer, we've got more competition, and then in the productivity layer, we have also competition, and that in some of them just being point solutions. Our point here is we don't believe that point solutions can solve digital trade. And being a network, and us being the network of networks and positioning ourselves as a neutral network, is really the solution to solving end-to-end digital trade. If we look at our ecosystem, we very proud, and that plays into the previous screen, very proud about what we've achieved in less than 3 years. We've built in 3 years an ecosystem spanning across the players in the global supply chain. And that is really sitting in one of 4 of these data silos that you would normally find them. And that's the commercial, logistic, finance, and government that I was earlier referring to. Now, in these 4 different silos, which TradeWindow is actively breaking down, the first one being commercial. If we think about commercial and reflect on the previous, those are really the ERP systems of importers, exporters, and the likes of SAP and Microsoft and Oracle. That's backend systems that optimize these this silo. And we've got good integration, integrating to currently 27 ERP systems, the largest of the ones available. In the logistics space, we've got integrations into the 2 biggest back-end offices of the carriers, the shipping companies, also into certain shipping companies, but also now working towards ports and getting that deeper integration in that mission-critical logistics sector. In finance, we are proud to be part of the SWIFT network as a non-supervised entity. And that's really to integrate into the banking sector and integrating into the financial world. And that SWIFT is that messaging system that really power the entire market's financial messaging. And TradeWindow is one of the very few in the world that is integrated as a non-supervised entity into this network to read and intercept financial messages. In terms of government, this is fast changing. And then we're part of the Pan-Asian E-commerce Alliance, and there's 16 trade windows that operate as part of that alliance. And we're now actively integrating into these. The first one that we end up interoperable with is the Taiwanese single trade window. And we actively working towards integrating into more of these systems. Now, in terms of leadership team, we're quite proud with the team that we can field. Most of the team is from international experience and has worked in different areas across the globe. Myself, Gavin, and Dealt has got South African experience, New Zealand and Australian. Then Brendan and Guy has worked in the UK and Germany. Peter and Kerry has worked for large corporates in Asia, Kerry in Japan and Singapore, and Peter in China, CEO of a multinational FMCG company. Andrew, our COO, has worked in Australia as well. And really with regards to trade tech and tech capabilities, we've got a really rock solid foundation in our tech team. And Brendan, our CTO, is a certified enterprise architect and has worked more than 30 years as enterprise architect and has worked for the likes of Air New Zealand, Tenzing, NHS, and BT Global. Our CIO, Dr. Guy Kloss, he's worked also as an enterprise architect, but he's actually a rocket scientist and has worked across data security and he's worked for companies like Bayer, German Aerospace, and Gentrack, and just to name a few. Dr. Andy Stanley is head of our onboarding, and he's been early pioneer of what built out what is known today as the New Zealand's single trade window. So really a well-versed team that we can field and well experienced and well regarded, and that really is paying off highly in terms of helping the team exceed on the international scale. And in the short time, we've proven that we can deliver. We've proven that in record time. And we believe that the well-talented team across New Zealand, Australia, and Singapore can really drive the organic growth from here on. If we look at our last slide in terms of our board, again, TradeWindow is really proud to put forward a board with highly experienced and respected board members with deep knowledge in supply chain, primary sector, and technology. We've got Alistair McLeod, our independent chair, also the chair of Port of Napier, among a few other. And then we've got Diane, she's also independent director of Port of Napier, with the same supply chain and knowledge and institutional knowledge. Then we've got Phil Norman, both NZX and ASX experience, and he's currently the chair of Plexure Group, Straker, and then also Just Group. But Phil is also has a technology pedigree, and being the inaugural chairman of Xero, we're really proud to have this highly skilled board on board of TradeWindow. Diana and Kerry, solid financial skills, and both being chartered accountants. Thank you, and thank you for your time this morning. It was really great to present TradeWindow to you.
AJ, fantastic, great presentation. Thanks very much. On a personal note, I used to work in logistics. I know it's one aspect of the business, but I remember the kind of cumbersome nature of record keeping that we used to encounter on a daily basis. But thank you very much. So we do have a few questions. We are slightly over, but we've got plenty of people still logged in. So let's go work through some of these. So question one is, do you foresee any challenges in persuading end users to move away from traditional methods of tracking logistics, looking at the logistics side?
Yeah, I think it's there's a definite line in the sand that I can say pre and post COVID. I think pre-COVID systems was mostly working, and it was paper-based, and there was awareness that we can't forever keep on with this current systems, but there wasn't that drive in enterprises, government, and across the whole supply chain to do the changes and do it in a rapid time and actually bring that investment. What we've seen post-COVID is really the fundamental of the inefficiencies has been shown across the supply chain, really with this bottleneck with paper not moving because it can't get onto airlines and it can't fly, and you get the goods there before you've got the documents, and there's no space and cost, and it's all of these bottleneck problems and access to market. All of these things has now been really highlighted, and I think governments has also now really realized that countries are dependent on their trade, and they have to really facilitate this, and they have to adopt digital trade, and they have to enforce that in a way, first by legalizing it and helping with setting data standards, setting document standards, and helping with legal harmonization. And that's exactly all what's going in, and all of these we can see going into the current free trade agreements and agreements like DIPA that New Zealand, Australia, and Singapore has set. So I think it's a matter of the investment is there, the resources there, the willingness is there, and I think governments has always been the big driver that drives, and legislation that drives change. And post-COVID, the enablement and seeing it how it moves from legacy straight to next generation technology has really been amazing to see how we can do it. And Bain has put out the report, and its simple fact is that post-COVID activity has accelerated digital trade with something like 10 years, and that's what we're seeing every day. And we're seeing it in terms of how the decision making. It usually would take up to 3 to 6 months to onboard an enterprise client is now even coming down to times like 2 weeks, just because it's such need for the product and for digital trade.
Excellent, fascinating stuff. Great. A couple more questions here. I think you mentioned about differentiation. The question here is, what is your point of differentiation from WiseTech? I did see their name in that slide. So anything you want to expand on that side of things?
Yeah, I think a differentiation with WiseTech is WiseTech plays in that custom broking freight forwarder space. And if you look at our product range, it covers much wider than what WiseTech is playing, and we that sector neutral network that plays right across the entire ecosystem. And then if you look at the focus client, that's the freight forwarder, like customer broker I mentioned. In that space, we deliver TradeWindow Freight and Express Freight, which is our two solutions that can compare really well. And we're globalizing that solution now, and entering new markets and fast accelerating the capability. But then also we service the exporter and importer directly, and bringing that blockchain layer, what we call Cube, that brings together all four of these data silos, if we think back to the earlier point, is that's the banking, the logistics, governments, and the commerce. And like I said, I would think that plays to the entire network and the entire ecosystem. And in our view, that's the only way you can solve digital trade. Our focus is pretty much bringing the digital ecosystem and a digital supply chain to the entire market.
Okay, great, fantastic. Probably got time for one more. Let's go for one more. There's still quite a few people on, so we'll ask this. So with global freight and logistic prices increasing at such a rapid pace, does your platform help your customers navigate this? Do you have any plans in the future to build this? If not,
yeah. So TradeWindow has got a interesting product in that mention that we've got productivity, connectivity, and that visibility, and that really takes you through that entire process. So productivity is that part that we help with getting goods out and getting good into the customs, and then the whole bettering that whole back-end office. And then in terms of the connectivity, that's really where we help to connect to airlines, connect to carriers and shipping lines, and then the visibility. Now, all of that is important, and why it's important is, although you can help book and create, look at better cost and efficiency, and help with speed to market and access to markets, and clearing goods quicker. It's all about now becoming about visibility. Now, we can't help with the bottlenecks in the world, but what we can help with, and we can't reduce the shipping cost, but what we can help with is we can help with identifying where the goods is, what ways is there to mitigate your risk, where can we create efficiency, how can you digitize it, how can you take better management decisions, how you can better operationally manage your business, and that visibility and that data enrichment help them take better decisions and reduce their cost and reduce their risk. For insurance companies, banks, and all of these companies that's got risk on the water, that's really what I help you. And also with the exporters, as they need to know where the goods is and how to mitigate that risk, and that together with products that creates that productivity and booking ships and finding the best routes and finding the best prices, that together is the solution.
Great, fantastic. AJ, I think we're going to leave it there. I really appreciate your time this morning. Great to hear about the business. Enjoy the rest of your afternoon. So thanks very much. Thanks very much for joining. And to everyone else, once again, thanks for joining this virtual investor event this morning. Any other questions that you think of, please do send them through if you'd like. We can get those answered. We're going to be back in a couple of weeks, I think. 2 weeks from now, we'll be having another investment event. So looking forward to that. Enjoy the rest of your day, everyone, and see you soon. Thanks, and thanks, AJ. Thank you.
Thank you.
Bye-bye.